Hey everyone, welcome to Breakout Wednesday for the 31st of July 2024. It's currently about 10:30 p.m. on the West Coast, half past 12 a.m. on the East Coast. First of all, remember there's never financial advice. I'm not a financial advisor. This is simply a video blog and have one trader sees the market. Everyone needs to take responsibility for their own decisions. A bit late bringing this out, obviously. Chart of the All Ords, huge day today, guys. This uptrend is on its way. And just I remember this time last week, it just had this tiny retracement, and I was getting messages, people worried about the market. It's just like, and I think I was talking last week how this is very normal. Any uptrend you've ever seen in your entire life nearly will always have little retracements back to its 2110. This is why I have all these moving average. One of the reasons why, just got to always remind yourself it's just going to happen, right? This comes up here, rallies for 3 days in a row, then be careful. It's not the time to take 10 trades, best time to take trades was in this now, like today. Look at one of the leaders like PME, okay, just broke out of this tight range today, and then they're the moves you want to be in, like the second they're happening kind of at the end of these mini retracements during a bull market, right? So anyway, let's just have a quick look at what's going on. This is pretty interesting. There's a lot of shit going on. Fortescue obviously had a huge investor sell down, massive gap down, right? And I don't know if that's a low. It's kind of like catching a falling knife there. It's like maybe it is good buying, or maybe it's best to wait for that thing to settle and just stop falling right so quickly. And so I'm definitely going to catch it. I was hoping that we were going to have reversal shit going on here, but obviously it didn't. That didn't pan out. There was a thread on the forum talking about it, and I was kind of, going along with it, and I thought it was a pretty good idea. But anyway, that didn't pan out, and obviously just gapped down heavily. So I'm not in FMG, but for those that are long-term investors in it, that would really sting, And I've been doing just some reshuffling in the long-term account. I still think that PLS has like a going to be heaps higher in a lot of years, but from now. But there's just opportunity cost here, there's big in the self-managed super fund. There are these big base breakouts and stuff like in expensive stocks like ARB, which I talked about a week or two ago, and Cochlear, and so I've just kind of decided the opportunity cost was too great there for me. So I've rotated my money into these stocks, breaking out of big bases in uptrends, okay, and that is my bread and butter, right? It's not really picking bottoms. It's just riding these big uptrends after massive bases, like I have with Sun, okay. I'm talking about just this is exactly. If I can just do this all day long, then I'm going to print money, okay, and my accounts are going to continue to compound. It's when I stray from that winning formula, right? Because this really is a winning formula. It's just the discipline to only take these, and then it's just going to be good year after good year after good year, right? It's when I go and start thinking that there's I should buy this right this second, because it's tempting. Like, I've got to admit, I thought about it yesterday, today, but I've just learned over the years that it looks cheap here, because it's gone from $29 to $18. I'll tell you what would look even cheaper if it fell to $6 or $2, and I've seen it happen, right? I'm not saying FMG would do that, because obviously it's a huge company. They print money, they got a lot of free cash flow and all that shit, right? But it still could easily afford $10, no brainer, right? And so I'm just catching falling knives is something I'm staying away from. Just concentrating on, on these big base breakouts in nice, expensive, good quality companies, right? That's in the self-managed super fund. Really, the trading account's a bit different. We're allowed to take some of the cheaper shit in there, right? So just quickly, obviously the ARB trade's going amazing. The Cochlear, it's churning away, hasn't gone crazy, but it's an uptrend, right? It's sitting above its 10-day exponential moving average. That's what it's going to take its time. You've got to be patient with it. The REA trade, boom, okay, just sticking in that. I might even add again. I've already got 2 parcels in the self-managed super fund of that, but I don't know if I can have too much of that, to be honest. I just think it's got a big future in it, but we'll see how it unfolds. Zero, likewise, pretty bullish on that, and I have been for ages. Okay, so now obviously the big banks, hopefully there's a lot of people been riding these. I remember, I don't know if I've talked about this before, but back when it was like $85 and there were like all these kind of financial advisors telling everyone that, some well-known ones saying how it's the most expensive bank in the world, and there were articles about how it's the most expensive bank in the world, and no one's recommending it, and now it's gone, and now it's at 137. Telling you, there's not that many people recommending it still. I think it's too expensive, everyone says, and I just think it's the hardest stupidity to not like something because it's quality and it's expensive. And I'm not saying it's a buy now, because this thing's gone pretty much straight up since $110. It needs the base, but it's just a winning formula, betting on winning companies that are in uptrends. Especially when they're coming out of massive bases. So let's just the other one I want to quickly chat about is FMG. All right, this tiny little base this beautiful little base I talked about a few weeks back that just broke out of it and went crazy. Obviously, little gap there, and some people probably missed that bit. Holy shit! Okay, you wouldn't think that like a capital management, asset management stock would break out of such a beautiful pattern and have such a good run, but it happens. 100%, and so I mean you can just tell from the look at this. I think I talked about it, a few weeks back, but it can move, right? It can have nice big uptrends. So anyway, that's how it's moved. So let's just move on to some new setups. I've talked about this one before, but COE on ASX energy stock. This is just a huge base here. Big resistance here. Okay, 235. Obviously, there's 2.6 billion of them, which is a lot. It's not perfect, but that's base in there with some pretty major resistance. Okay, I'd like to think that if it can overcome that, it's got to have a bit of a trot in it. But statistically, the other one I still like. There's some little. I'm a sucker for these consumer finance plays, like the non-major banks, alternative finance companies, just because they're cash flow kings. I'm not saying Hum is, but some of the others are, and I've talked about it before, but Hum is sitting here and it's coming up in a tri-point resistance scan of weekly data, and let's just clean it up a little bit, but it's a pretty clean setup here, right? It's come down to support, it's come down to massive support here, bounced, okay? It's got massive resistance here at 47, 47, 47. It's had three cracks here, bang, bang, bang at 47, here, so it's had like 1, 2, 3, let's just call it 4 tests of 47 level, and it's come back down here. I still think the risk reward on it's pretty good, so watching Hum, there's not too much I'm watching at the moment, but that's definitely one of them. I'm still watching Judo Bank just because there aren't that many bases on the ASX at the moment that look like that, that's basing for long enough, and I was waiting for it to give this little right hand side. This isn't perfect, right, but it's certainly tightening. Okay, just this was shit the way it had come up from here to here, but now it's gone and it's had like a 50% retracement of this move, pretty much, maybe a little bit more, and then it's now tightening. So this is damn interesting, okay, and I'd love this to tighten a little bit more, but I think it's ready for me. If it did gap up one day and took it, then I'm probably going to be in that one. But it's not perfect. Perfection would be to come up here, touch it, really chill out for a few days. That would be perfection. We'll see that we might get it. Who knows? The market will do what the market will do, right? I've already talked about PME, but it goes back to the same old theory. Like, the best companies out there keep delivering. Okay, and I just think that's why all these the mini Vinnies of the world and the Nick Davis, like, they follow leading stocks, because leading stocks usually keep leading. All right, would I want to bet on some shit stock that no one's ever heard of, or would I want to bet on CBA if my absolute life depended on it? Okay, and obviously you want to bet on CBA, right? And it's the same thing, if it's the same, with a lot of things in life. Okay, winning athletes tend to keep winning, and it's the same with winning companies. Okay, a good company doesn't become a shit company overnight, right? Anyway, that's that. Now, on the Davis side of thing, there's this other little alternative finance stock. For those that have been around ages, remember the old Money 3. They had a name change to Solvar. It's a pretty shit name, isn't it? Right, compared to, I thought Money 3 was a way better name. This box here has come up here too, which is annoying. We're filtering that out in a sec, because that shouldn't freaking happen. But that won't happen soon. The devs are working on this currently. Obviously this Davis box isn't true, but this one here is. This came up in a Davis scan on SVR. Ignore this big box here. And it's just, been in a downtrend for ages. Let me just clean this up and go back to it. And there we go, I fixed it because it was pissing me off. So here's SVR, okay. It's the old Money 3. Like, this was a dial in the market a while back. Obviously high of 3.8, now it's down to 1.14. These guys are, paying about a 13 to 14% divvy, I think. When you look into the company, it's, these guys generate cash, right? This isn't ideal. Like, this 200 days still sloping a bit down. This probably needs to base longer. But it's definitely watching this. Just the way I'd be playing this though is because this thing is kind of, a lot of trend traders would still say that's in a downtrend, right? Because there's an old theory that the moving averages have to long-term moving averages like the 200 needs to flatten and start turning up. Is a one way to define an uptrend. It's not all about higher highs and higher lows. Okay, there's plenty of different ways to look at shit, right? And so. And so this probably does need more time, but if I was going to get in it, it would be a smaller position with a stop all the way down here, all right, and just really giving it room and wiggle room to do its thing. It does have gap downs too, obviously, when it goes ex-div. And the only other little one I'm looking at the moment, because I kind of got quite a lot of trades going. I'm not talking about US much at the moment. I should, but it's just I'm just not really talking about it too much. Like, a lot of the tech, like I'll show you. Just resetting. Nvidia's going down. Apple's had this huge run and it's gone down, and it's just resetting. Right, there's been some cheeky little shorts in there for people like doing that sort of stuff. But they're just the leading companies are setting. Like, you've got, I'm getting distracted, but you've got these massive, big companies like Lulu that have been getting absolutely spanked. Okay, like Lulu, Nike, and I could just talk forever about this, but there's just the market needs to set up for a lot of these big leading stocks, and it's just I'm just not finding my setups at the moment in the US market, and so therefore I'm kind of sitting it out. And that's why I haven't been talking about a bunch of setups. Like, there have been a few, but they've been in much more kind of lower cap stocks that I don't talk about. Anyway. So talk about SVR. Now let's just move on. The last stock is that this came up on a forum with these guys here. Who brought that up first? Craig, right? So obviously Craig's been finding some pretty bloody amazing setups lately. But AUE has that. It's got that look. Hey, this is a really good pick. It's not giving me 20 days here, but this is just tight VCP action, really low volume some of these days. Only 56k went through today, so pretty low liquid, but it is drying up, giving us a VCP beforehand. And this is a gold stock, isn't it? So it's got a look about it. Yeah, it's got this overhead supply here, but this is really tight. And it'd be interesting to see that the order book. For those that you're interested in order book and market depth and stuff, like stocks like this, the market depth can really help you because it's thin and you can actually see what's going on. But stuff like liquid stocks, CBA. I mean, no one's going to get shitter help from CBA looking at its order book. I'm telling you now, it's like completely just a waste of time. But tiny little things like AUE, AKM, all those stocks I've talked about recently, then the order book can really help. But there's a big wall of sellers here at 385. I haven't seen them today. I'm going to look in the morning, and it clears that wall. Then it could be a good trade. Actually, the wall needs to be at 39. Sorry, not 385. I'll check that out in the morning when the market's open. But we'll follow that up on. Everyone will follow that up on the forum, I presume. Hope everyone's enjoying the forum. Been a bit quiet lately. I've just been under the pump. Apologise for that, but I'll be back soon once some family shit settles down. All right. Take care, everyone. Have fun. Cheers, bye.